Bitcoin just had a large flash crash. What's coming up next, and what are the things that we need to look out for? Join me as I dive into some of the fundamentals of the market. We analyze what could come next. Before I start, if you do enjoy this content, if you want to keep supporting me to make more content, please give me a like, give me a subscribe to my channel so I can provide future videos for everybody. First off, I want to take a look at Bitcoin. Okay, now remember that when Bitcoin moves, the altcoin market genuinely responds to it. One thing that we're going to take a look at today is what we call open interest. You can see down the bottom here, I have this indicator called the open interest sweep. What open interest is essentially the amount of leverage positions that are open at a given time. Now, what we can see here is that whenever the open interest level hits a certain period, or sorry, a certain level, I should say, what we see is the markets tend to crash. Now, this is not always 100%. This is just one single metric to look at to incorporate in your trading. But why does this happen? So one thing that we need to understand is the market cycles. Okay, now at the bottom of the market cycle, this is where the smart money gets in. You'll see that there is very low amount of leverage positions that are open. That is when the smart money is buying or accumulating for their position. As we go up, what happens is people start to FOMO. We see this all the time. People start to FOMO. They start to say, I want a piece of the pie. Problem with this is when too many people jump in, what happens is there's a large amount of open interest, a large amount of open leverage positions that have been created, and the institutions straight up do not want you to get rich. That's the way it is. That's the way trading always has been. And they do not want to see you get rich. And for every person who is making money in this market, remember that there is a loser. Okay. So while the price is going up, we start to see that the big money who entered down the bottom starting to take some profits. Now, if we zoom in to the chart, what we can see is quite a large red candle. What this essentially is what we call a liquidation flush out. So what it's trying to do is to scare more people out of the market. When you hit the level where everybody's making money in a market, it essentially gets to a point where we need to see a pullback. And that's what we have here. And it's basically the whole of all these people that got in late, the people who weren't here at the start of the cycle, not all of them, but a majority of them got flushed out. I think there was $300 million in flush outs. If you go back and you have a look at the previous bull market, what you're going to notice is that, yeah, we have runs that go up, but we also have decent pullbacks. This is the same thing. Price has gone up. You see here we had an 18% correction. Price has then gone up from this level about 130%. And what did we see after that? Once again, we saw a correction. So corrections are completely normal. And just because we're getting a correction, this doesn't exactly mean that the bear market's coming and we're going down to $10,000. Okay, so let's not worry about that too much just yet. But what this is too many people have made money. They need to flush some people out before continuing up. Okay, it's very simple. So what we're seeing here is we hit this level. The open interest was at an all-time high. And if you're looking at this indicator, what you're going to notice is that as open interest hits these levels, we tend to see a bit of a price reversal. Too many people are in the market. As some people like to say, the markets are getting a little bit too frothy. That's what we call it. Now, on top of this, so this is one indicator for you guys to take a look at. Have a look at it in your own time and use this as a metric. You can go back and back test it, and you can see here that every time there's been X amount of open positions, open interest positions, we have seen a bit of a pullback. Now, another thing to consider is we use this website here. It's called Forex Factory. And this predicts all of the economic events that are coming up, or shows you all the economic events that are coming up. When you're trading Bitcoin, it's really important that we understand that Bitcoin is hedged to the US dollar. If we open up on our second chart, we type in DXY, what you're going to find is that when the DXY comes down, Bitcoin tends to head up. So what affects the US dollar? That's what we need to pay attention on the Forex Factory calendar. This week, we've got quite a large amount of announcements. So this week, I'm predicting the market to be quite volatile. And if you're in high leverage positions, might be a time to reevaluate some of those positions. If we have a look here, what we can see is at 12:30 a.m. Melbourne time. That's tonight, Tuesday at 12:30, or Tuesday night, essentially midnight. There's going to be an announcement about the core CPI. Core CPI measures inflation, and I've been sharing this with the Empire community. If you're not in Empire yet, there'll be a link in the description below where you can click on that and you can join our community. But we've been talking about this for months. about how Russia and Iran have basically paused their production on oil, causing inflation to go up, making oil more expensive. And when we talk about oil being more expensive, you're probably saying, well, how does this affect Bitcoin? Thing is when oil is more expensive, what essentially happens is that all the goods and services that we buy tend to also get more expensive. The reason for that is because they're shipped on trucks. They are on boats and things that need fuel. Okay, so if fuel's more expensive, transport's more expensive. And because the cost of transport gets more expensive, that added cost gets added onto the product that you're buying, whether it be fruit, vegetables, food, consumer electronics, whatever it is. So the inflation in the US has been quite high. And as the inflation in the US goes up, it's essentially telling us that the dollar is buying less. It's getting weaker. And due to this, we can see the DXY come down as it gets weaker, and the price of Bitcoin, as it has its original value, tends to get stronger. Now, whilst the purchasing power may be the same or similar, because at this price here, you may have bought a loaf of bread for $1. Now down here, you're probably buying a loaf of bread for $1.20. You can see that the price basically factors in for that. One website that we can use is called Trueflation. Trueflation helps us to measure the inflation rate of, we can see here for the US, the US inflation rate. And we can see that in the last month, they've made it so it's premium now, sorry. You'll need an account, you can register here, and you'll be able to track what the inflation is. Now, inflation has been going up in the US, and last month, what they essentially said was that inflation is coming down. However, there was a lot of reports saying that it could have been a lie. Let's head back here. What we want to take notice of is the forecast. The forecast is 0.3%. If you come to this website at the time of the announcement, there'll be a little green button here that you can refresh, and it's going to help you to see what the live result is. And also with this, you'll be able to track the market live, how it reacts to this announcement. An actual result that is greater than the forecast is good for currency. If it's good for currency, well, then what do you think is going to happen to Bitcoin? Currency gets stronger, Bitcoin could potentially come down. So that we have to wait and see what's going to happen. But it doesn't end there. We've also got the FOMC meeting. The FOMC is when the economists get together and predict the interest rate. Now, a stronger interest rate leads to people holding more US dollars and putting those US dollars into accounts where they earn a return, therefore making the US dollar stronger. Once again, a stronger US dollar can lead to a lower price in Bitcoin. However, if the interest rate is lowered, then what you find is the dollar gets lower. Now, according to this tool here, by the CME group, we can use this FedWatch tool, and it's telling us that the next FOMC meeting is in a day and 12 hours. And there is a 98.4% prediction that interest rates will stay the same. So this can be seen as a bullish thing for Bitcoin, as interest rates are not going up. Going down would be the best case scenario, but going up would be the worst case scenario, smack bang in the middle. So it's kind of like a neutral but somewhat bullish response. That's if this comes out. Remember, the probability is still a 1.6 chance that that's not going to happen. And this could change by tomorrow depending on what the inflation numbers come out. Because as inflation numbers, if inflation gets stronger, you'll find that the economists and Fed, they like to raise the interest rate to try and lower the inflation. So we have to wait for these results to come out first. And you can simply click on, there'll be a little green button here, which you can press, and that's going to help you to update to see what it is. The last important one that we have is the core retail sales. That's this week on Friday. Now, this is another really important announcement because the core retail sales also shows how much spending is going on in the US. And it also helps us to kind of, somewhat guide for the economy's strength. People aren't buying stuff. It means they don't have much money, okay? Now, one important metric that I want to bring up is we looked at this also in Empire last week. If you're not in Empire, remember to click on the link down below in the description. And also to subscribe to me so I can keep making more content for you guys. I hope this has been useful so far. The US Black Friday sales have risen 2.5%. The problem with this is inflation, off the top of my head, is up 7%. So technically, whilst there's been a bigger spend, more dollars have gone through the system, technically less is being bought. Does that make sense? The US dollars shoppers have spent 9.8 billion, which is an increase, but they're buying less for their money because inflation is higher than what it was before. Anyone living in the US, in Australia, you probably noticed inflation has gone up. It's not really hard to tell. It's been hitting everybody at at the supermarket when they go to the checkout. It's quite obvious. So whilst there's trying to push this narrative of the economy going up, what we're actually seeing is a declining economy. So that's a couple of things to look out for this week. Keep your eyes on these announcements, and I'll be going over them, posting updates in the Empire community. And once again, keep your eyes on the open interest. Remember that throughout the bull market, we've had large dips. And what we're seeing now, after the large dip, what we're seeing is usually a recovery. What we're seeing here now is the start of a dip. We can see that the open interest is just starting to pull back. Whilst we could bounce, there could be an opportunity for a potential higher dip coming back down to around 30, 31,000, maybe a little bit higher, 34, 35,000, the previous level of support that we've got here. So make sure that if you are in positions, to adjust them in a way that if things do go the worst way, that you're not going to expose yourself to too much risk. Remember that when we're trading, it's great to make money, don't get me wrong, but we also have to think of the risks. So make sure that you're not too highly leveraged. And yeah. So guys, thank you for watching this. I hope this update's helped you out a little bit, give you a bit of an understanding of what to look for. Remember that this can be seen as a washout, but at the same time, data shows otherwise, and the announcements that are coming up this week could potentially bring a lot of volatility and movement to the market. Play it safe out there. Don't get wrecked. Jump into Empire platform to keep up to date with updates. Links in the description. Don't forget to subscribe. Thank you, everybody, and I'll see you next time. Bye for now.